Hello everybody. Today we're looking at diversification of assets that a retail broker should have. So should you do it, or should you just stick to spot FX and that's all you need to offer to your clients? Well, in our experience with our hundreds and hundreds of clients that we've got, those that have diversification of their asset classes generally do better. They weather storms better, they attract more clients. So yes, you need to do it, but you need to do it right. If you're an FX broker, for example, don't add lots of single stocks. I just don't think it works. We've seen people try it many times. It never works because it's not a leveraged product. It's very difficult to make money when you've got a non-leveraged equity product. People trade them on a much smaller size than they do on FX. Because it's not leveraged, the amount they trade is generally much lower as well. So the amount they make and lose is much less, and the amount you make or lose is much less too. So you need something else that's leveraged. So what can you look at? Well, CFDs are a really good idea. Many people are offering CFDs on indices. Very common thing to do. Obviously gold and silver as traded as FX, oil, some precious metals, palladium, etc. There, again, very popular thing to add, and I would recommend those too. But what about cryptos? Should you add cryptos as a diversified asset class? And what happens if you don't diversify? What happens if you don't add other asset classes? Well, we talked about adding traditional ones like CFDs and index CFDs and commodity CFDs. I think that's a good idea, as I said. But what about the crypto ones? Well, if you do it, you need to make sure that you can risk manage it properly, because the worst thing you can do is add an asset class that is incredibly volatile, like a crypto is, but without the ability to cover it in the market properly. If you can't manage your risk in it, then you're just gambling with all of your money, which is not a really good idea, because that's not what brokers are for. So cryptos, yes, they're a good idea to have as an additional asset class if you can risk manage it properly. And the good news is that over the last year or so, the liquidity available in cryptos for you to cover your trades in the market has blossomed enormously. There's a huge amount more capability for you to run a proper ABIT model with lots of liquidity providers. Our crypto switch product has multiple market makers, and we have exchanges integrated as well, the institutional style exchanges, where you can cover your trades in the market and you can get very good spreads on the prices. You can get a very good depth of market. The book is very deep because there are a number of different people involved making those prices up. They are all institutions, and so they'll provide excellent pricing for you. So yes, it's changed a lot, it's improved a lot, and I would say yes, come in, the water's looking good, and it's a good time to offer cryptocurrencies as another asset class to your clients.